John C. Bogle's Common Sense on Mutual Funds is a journey into the world of investing that combines wisdom, history, and a deep respect for the individual investor. At its heart, the book champions the idea that investing is not about chasing fads or trying to outsmart the market. Rather, it is a disciplined pursuit of consistent, long-term returns, grounded in logic and common sense. Bogle, the founder of Vanguard, speaks with the authority of experience, yet his tone is approachable, as though sitting across the table from a trusted mentor willing to share the lessons he learned the hard way. Bogle begins by dismantling the illusions that often cloud investors' judgment. He argues that the promise of beating the market consistently is largely a myth, and that most actively managed funds fail to deliver after accounting for fees and expenses. The narrative he weaves is rich with historical examples, showing that even the most celebrated fund managers often underperform broad market indexes over time. The lesson is clear: luck plays a role in short-term success, but persistent outperformance is rare. The story of mutual funds is also a story of human behavior. Bogle details how investor psychology, greed, fear, and the allure of quick gains often leads to poor decision-making. Through anecdotes, he illustrates the pitfalls of market timing and speculation. Investors, he explains, tend to chase performance rather than focusing on fundamentals, buying high and selling low. The book paints a vivid picture of the dangers inherent in emotional investing, emphasizing that self-discipline is as critical as any financial strategy. Central to Bogle's philosophy is the concept of the index fund. He recounts the creation of Vanguard's first index fund, a revolutionary idea at the time, which sought to match the market rather than beat it. This approach, he argues, allows investors to capture the broad gains of the market with minimal costs. The storytelling here is compelling, detailing both the skepticism he faced and the quiet triumph of an investment vehicle that has since transformed the industry. The narrative is imbued with a sense of mission, helping ordinary investors succeed without falling prey to unnecessary risks or fees. Bogle emphasizes the corrosive impact of costs on investment returns. Management fees, trading costs, and taxes, he explains, are silent but relentless adversaries. Even small differences in costs can compound into significant disparities over decades. Through practical examples, he shows how low-cost index funds, held patiently, can outperform high-cost actively managed funds. The story of compounding becomes almost a character in itself, a slow, steady force that rewards patience and punishes hubris. One of the book's enduring strengths is its accessibility. Bogle tells stories of everyday investors, not just financial elites, illustrating how anyone with discipline and a long-term mindset can build wealth. He avoids jargon, instead translating complex financial concepts into language that is both vivid and understandable. The anecdotes about families saving for college or retirement give the book heart, reminding readers that investing is ultimately about life goals, not abstract numbers. Bogle is careful to frame investment strategy within the context of time. He draws on decades of market data to illustrate the cycles of growth, recession, and recovery, highlighting the inevitability of volatility. The narrative is candid about the discomfort that comes with market downturns, yet it underscores the reward for those who resist panic selling. By framing these lessons as a story of resilience, Bogle provides a roadmap for enduring the emotional roller coaster of investing. Risk, Bogle argues, is often misunderstood. He tells stories of investors who equate short-term losses with true risk, when in fact the real danger lies in permanent loss of capital. Through examples of diversified portfolios and balanced asset allocation, he illustrates how risk can be managed intelligently. The reader is guided to see risk not as something to avoid entirely but as a landscape to navigate with knowledge and prudence. Taxes, too, enter the narrative as a stealthy adversary. Bogle describes the erosion of returns through capital gains taxes and emphasizes the power of tax-efficient investing. The story here is not about legal loopholes but about awareness and planning. Holding investments for the long term, he explains, not only reduces costs but maximizes the effect of compounding. This thread of intentionality weaves through the book, turning every investment choice into a decision with measurable consequences. Throughout the book, Bogle never shies away from challenging the conventional wisdom of Wall Street. He critiques the glorification of star fund managers and warns against the seductive promises of hot funds. The storytelling is almost David and Goliath in tone, the small, disciplined investor versus the sprawling machinery of the investment industry. Bogle's narrative empowers readers to see that success does not require insider knowledge, but rather a commitment to low-cost, patient strategies. Bogle also addresses the emotional and ethical dimensions of investing. He shares his belief that finance should serve the individual, not the other way around. The human stories in the book, families, retirees, young professionals, anchor the technical advice in lived experience. The message is moral as well as practical. Investing should be a tool for security and independence, not a speculative gamble that benefits only the fund managers. The book's structure itself mirrors its philosophy. Bogle interweaves historical anecdotes, empirical data, and practical advice in a narrative that flows naturally rather than imposing a rigid framework. Each chapter builds on the last, guiding the reader from understanding the market, to recognizing the dangers of high costs, to implementing an effective, low-cost investment strategy. It reads like a guided journey, where each insight is both educational and immediately applicable. Bogle's storytelling is also rich in contrast. He juxtaposes the short-term frenzy of speculative investors with the calm persistence of index fund holders. He describes episodes of market euphoria and panic, using them as parables for the behavior he wants investors to avoid. These stories, drawn from decades of experience, illustrate timeless truths about human nature and financial markets, making the lessons resonate far beyond the numbers. The narrative repeatedly returns to the power of simplicity. Complex strategies, frequent trading, and attempts to beat the market are shown to be distractions that often reduce returns. By following a straightforward approach, investing broadly, minimizing costs, staying the course, the ordinary investor can achieve extraordinary results. Bogle's voice in these passages is almost conversational, encouraging readers to trust in the elegance of a disciplined, uncomplicated strategy. By the conclusion, Bogle has done more than impart investment advice, he has reframed the reader's relationship with money. Investing becomes less a game of speculation and more a practice of patience, knowledge, and self-discipline. The book's narrative arc, combining historical insight, practical guidance, and human stories, leaves the reader equipped not just to invest, but to think clearly about financial decisions in the context of a lifetime. Ultimately, Common Sense on Mutual Funds is a story of empowerment. Bogle shows that with wisdom, discipline, and attention to costs, the average investor can participate in the wealth created by the capital markets without falling victim to the excesses of the investment industry. His storytelling transforms abstract concepts into vivid, actionable lessons, making the book as inspiring as it is instructive. It is not merely a manual for investing, but a testament to the enduring value of common sense in a world that often overlooks it.